Hi, and thank you for joining me on your Saturday evening or morning, whichever it might be. Being the market is closed and closed yesterday, Friday, at 5 p.m. Eastern, there's not a whole lot we can do, but we can discuss the last week of trading that actually took place. So I'm going to open my share screen so you can see what's going on. This trade is beautiful. Very, very beautiful. Going back over my records, I can see that this time last week, the trade was sitting at, hang on a sec, let me take a look at my notes. And that would have been the 15th? Nope, because the 14th, 15th, and 16th, I wasn't here. So it'd be before then, which would have been it opened a week ago, this coming Sunday, at negative $29.95. And it closed today, or Friday, yesterday, at 5 p.m. Eastern, at a negative $15. That's a whole 1,400 pip difference in a week. That's pretty awesome. Very, very awesome. And it keeps going. It's going and going. And let me explain a little bit to you. This trade is New Zealand NZD US dollar or USD. I've got my time chart at the daily. My entry point, the entry price, is 0.68310. My stop loss is sitting at 0.62310. Going down to the hour, 4 hour, you can see how much that actually is, which is 6,000 pips or $60. Not a bad thing. But my take profit is currently at 0.74310, which is also 6,000 pips, as you can see, or $60 in profit. This is unphenomenal. And I have been running this, I believe, June 25th of this year. So I've been watching all of this happen, all of this go on from about here on the chart to where it is today. And that is killer. Many people say, how do you get your trades? How do you get your signals? What do you do to find them? And with IML TV and IML Academy, we have the education portion to get the signals from a product that we have, which is called swipe trades. I also get signals or a trade to place from 3 different people. Warren Wright, Stevenson Lindor, Christopher Terry, and again, another 4th person is Tracy Walker. All these people coincide showing me ideas of what to find as a specific trade that I agree with. And it just so happens that NZDUSD is the one that I've been with since May, or June actually. Yeah, June 24th or June 25th, around that time frame. The reason I have an issue remembering the exact date is because every time I sleep at night, I go through grand mal seizures, which clean my memory, clear it completely of nothing. So I have to start as if I were 6 months old on how to breathe, move, walk, take care of me, all of that, plus relearn business. That's why my charts are considered naked charts, because there are no indicators, no other signals, just the one signal, the one trade pair, the take profit, the entry price, as well as the stop loss. That's all you'll see on my chart. It's because it's difficult to relearn it starting from scratch. And that's why I do the training I'm doing for you. I'm putting it on a level that anyone with a third grade education and above could do it. And even the younger kids can do it because it's simple math, copy and paste. Paying attention, reading the charts, taking the time to research one pair and only one pair until you get it where you want it to be. Now, I've also been asked, why don't I put in other positions, like a sell where it could have easily been done, or another buy, and that's fine. That's completely safe and smart. However, with this specific broker, they have an FIFO, which in layman's terms is first in, first out. So if I were to say I've got this trade going already, and I see, you know what, I could do a sell right here. That sell position on this trade would have to wait until the first position I put in goes either into profit or I take a loss. And I don't take losses. It also changes my margin level. If you get, in my opinion, if you get below 500% in your margin, you're at risk to being what's called stomped out, where you'll lose your account and your brokers will take it because they don't want to lose money. They're going to let you lose it. It's kind of smart, kind of not very nice, but it's what it is. And it's an understanding for us. For me to use this chart, this trade, I have to work with a specific broker that on agreement is willing to let me do my trades. So if the first in, first out rule goes in. If I go over 24 hours on one specific trade, they take anywhere from 2.02 to up to 0.12. So that's 2 cents to 12 cents for over 24 hours. And it depends on where they see you are. Recently, before this market closed, they took another 0.3, so 3 pennies. Not that big of a deal. Not that big of a deal at all. And it's for the use of this chart, of this market, of this broker. There's always fees. There's always an investment when you do business. It's part of the business representation, being able to do that. Now I'm going to show you why I stay in the day time chart. I'm going to go down to the minute time chart. And what do you see there? Can you tell me where's a good place other than what mine's already is of a take profit or a stop loss? And can you see if it's doing anything? Because I don't see much. It's not moving much. Granted, the market is closed and you wouldn't see it anyway. However, if it were open, that's where you look left to trade right. Now I go in the 5 minute and I'm getting a little bit of movement, but still there's not enough here to see how to place my stop loss or my take profit, or pay attention to the indicators because there aren't any, nor are they high enough for it to do any very much of movement. Going into the 15-minute time chart, now these smaller time charts are fine for those that want to trade in half an hour or less, 30 minutes or less, and there's nothing wrong with it. I just like the longer time frame because I stay in the trade much longer time, which takes little to no emotion, as well as consistency, as well as patience. And it's very important to be able to sit back and let the trade do what it wishes to do, because you can't control it. Going into the 30-minute, I can see a little more, but I'm kind of skeptical on exactly what this trade's going to do. I don't see a very good, clear pattern to be able to make a judgment call on, hey, yeah, this is going to be great. I don't see it. It doesn't go back far enough. Moving into the 1 hour time chart, you can actually do quite a bit in this time chart. But you're still only getting the first chapter of the story. You don't get the full story. So the higher time charts are necessary to get the full story of the trade. For instance, your 4 hour. You have a better chance to figure out what's going on here than you would at a 1 minute. You have more of a time. You can see some of the patterns that the trade is actually doing, but I'm still questioning because there's still something that's not completely clear or is missing. However, you can trade on this time chart without any issue. If you want to keep looking at your trade every hour or every 4 hours. I'm kind of wanting to get some sleep sometimes, because when the market runs from Sunday at 5 p.m. Eastern to Friday at 5 p.m. Eastern, there's no break in there. The trade's always running. So when you're trying to sleep, if you don't have a good enough or a high enough take profit and or stop loss, a 1-to-1 ratio is where I stay. If you don't have that, you're going to get stomped out, or you'll be in take profit. And you may not be too thrilled with the amount of pips that you get. Now, what is a pip? A pip is a measurement of where the trade's actually at. So instead of saying pennies, it's a pip. If you have a 0.01 lot size, it's a penny. It changes. So if you have a 0.1, it's more like 10 cents. You see, the profit part is the actual purchase of the trade is 10 cents when you first get in at the 0.01. It's all math, and it all works out in the long run. Going into the day time chart, I can see what's going on here, and it goes clear back to January of 2014, which is about 4.5 years, if not a little more. And with this, I can see what's going on. Looking at this trade, you look left to trade right. You can see the pattern that this specific trade does. So it goes 1, 2, 3, and then up. And then 1, 2, 3. That one went the other way. There's no concern here. You got 1, 2, 3, and up. And then it came down and did 1, 2, 3, and up. And it does this all through this pair, bringing us to just a negative $15 when it closed Friday at 5 p.m. Eastern. So then my next guess, if I were to look at this trade, I would say that it could turn around to do its stance of 3 to go up. But I am almost positive that by the end of this month of September, we're going to be in profit. It could take a little bit longer. So, but it's going to happen soon. There's no doubt in my mind that this is going to turn around and do exactly what we want it to do. Because it's no longer at the negative $28. Being at negative 15, that's pretty decent and pretty well done. So, with the market closed, there's not a whole lot more we can discuss. I do want to show you something. I'm going to go on the week time chart, and you can see what I'm talking about, why I think it's going to go straight up. Because if you come back over to where it was actually mentioned, right in here, it went up right there. It went up. So it's going to go up because the patterns of the trade, this specific one, continually repeats itself. Each direction it goes, it constantly repeats itself. And it's all through this trade. I'm going to go back to the daytime chart, adjust my chart a little bit so the whole trade is there. The entry price, the stop loss, as well as the take profit. Now we're going to stop our screen share and see if there's any questions. Going once, going twice, and gone. And thank you for joining me on your Saturday evening or morning, depending on where you are in the world. And you go and have a fantastic weekend. And I'll see you again on Monday. Bye for now.